Aaron Wissner of Local Future, and I'm on the line live with Robert Rapier. Today is Wednesday, July the 29th, 2020. Robert, how are you doing today?
I'm good. How are you doing?
I'm very well, thank you. So I've seen peak oil come up in the news a couple times recently. And what do you think about that? Are we at peak oil, or do we need to look at it a different way?
So I looked, and some of the stories on peak oil lately are really sort of conflating a peak oil scenario with a peak demand scenario, and those two things are really different. And I've written about this distinction for Forbes. Here's the difference: if you have a geological peak where oil production starts to decline and demand is still high, you're going to have skyrocketing oil prices, and that's what we've seen in the past. When from 2005 to about 2014, we saw demand really high and supplies were rising even then, but they weren't rising fast enough to stay ahead of demand. And so we saw a lot of high pressure on prices. Now imagine during that time, oil production had actually started to deplete. Oil prices are going to have to go up and up and up to try to balance supply and demand. Peak demand scenario, which some people are calling peak oil, is different. In that scenario, demand for oil starts to fall for different reasons. Maybe you've got, imagine a whole bunch of electric cars are hitting the roads and suddenly oil demand declines. And so you will see oil production follow that. You'll see oil production follow it down, but this is a totally different cause. This is because people don't need the oil anymore. And in that case, prices are going to fall. And so this is a very different situation. And I've seen some people take credit for, well, I called peak oil in 2020. Well, it's not the peak oil that you were talking about. I mean, you weren't talking about demand falling because people don't need oil. You're talking about, people need oil, but there's just not enough. Or people need oil, but they can't afford it. That's, one popular commenter in the peak oil circles has always pushed that theory. Well,
okay, let me pose a related question then, Robert.
Yeah.
In the USA, in continental USA, Alaska, wherever, off-seas waters, at some point, there's going to be a maximum amount of BTUs being extracted for oil and gas.
Yep.
So have we reached that yet, or what do you think?
We may have reached it. It really depends on how COVID plays out here. What I foresaw at the beginning of the year, I saw us increasing demand we've increased oil demand for 35 years. We've had very few blips in that. We've increased oil demand by about 1 million barrels a day per year for 35 years. And I saw that continuing for another, 5, maybe 10 years.
Are you talking about globally or USA?
Globally, I'm talking globally. Now, in the US, we have declined in our oil demand a little bit over the past few years. It hasn't been a steep decline in demand, but been a little bit of a decline. But now COVID has kind of changed everything because COVID has dropped oil demand worldwide. And I just checked the US today, and US still, we're down about 20% on demand year over year. And our production is only down about 7.5%. So we're still overproducing in the U.S., even though even though we have dropped production some, it's still not enough to meet lower demand. And so as the world starts to recover from COVID, and barring another second wave in the fall, I think we'll slowly start to grow oil demand back for a few years. But if this crisis goes on for 2 or 3 years, you could see us heading right into a scenario where electric cars do start to legitimately take large chunks of oil demand away. And in that case, we could be there right now. We could be at peak oil, maybe last year, because this year demand is going to be lower. Now, is it going to rebound next year to, higher than it was last year? Probably not, because I just don't see COVID going away that fast. If you look at some countries, like a lot of European countries, it's basically fallen off to nothing. And if that happened worldwide and we didn't have any flare-ups, we probably get back to oil demand being about where it was a year from now, 2 years from now. But any wild cards in there, you see a flare up, you see China explode in cases again, anything like that it's all bets are off then for oil demand, and really no way to tell when it's going to recover.
Now, it seems to me that a lot of the consumption, I mean, people in the US buy lots and lots of stuff, right? And the stuff that's being produced, it takes energy to produce that stuff. But a lot of that energy is not energy that, that's energy that goes into manufacturing in China, India, Mexico, Canada, other places. So is the US reached like peak per capita oil consumption? Or what do you think about that?
Our per capita oil consumption has been declining, and we may very well have reached peak per capita oil consumption. One of the things though, when we outsource our manufacturing to China, they use a whole lot more coal in their production than we do. So we're actually making carbon dioxide emissions a lot worse than if we manufactured some of those things here ourselves, because our energy production here is cleaner than it is in China. So that's one thing that's often overlooked is, you shift something from here to China, you also may dramatically increase the carbon dioxide emissions associated with that manufacture.
Now, can we talk a little bit about the last 3 months as far as oil prices and energy prices?
Yep.
Okay, first of all, I've noticed that, in the last 3 months or so, the price for crude oil has went from $15 a barrel to about $40 a barrel. What's the reason for that?
So a couple of reasons. One is that we've seen production in the US decline. We've seen manufacturing return to normal for a lot of the rest of the world, not quite in the US yet. We're not back to normal yet, but a lot of the world has returned to normal. We're still not seeing transportation where it was. You're not seeing airline traffic back where it was. But I think the market is really looking ahead, and it's thinking, it has been thinking, the world as a whole is getting past this COVID crisis. And I don't think that's accurate. And I've said, for a couple of months, I think there's a real disconnect in what the stock market is doing and the health of the underlying economy. I think the Fed has injected a lot of money in, the stimulus, the enhanced unemployment benefits, all that has helped keep the stock market propped up. But at the same time, we're driving the deficit higher and higher. And now we've got a situation this week where those expanded unemployment benefits have ended. They haven't yet passed anything to replace that. And when they do replace it, it's probably going to be a lot lower than it was. And so we're still in a very, very risky situation here, I think, going forward, where the market is just disconnected from the economy. And another reason for that is the indices are like the NASDAQ S&P 500. The big tech companies are the biggest companies in those two indices, and those are doing pretty well. I mean, Amazon this year has done very, very well, and you might expect that. More people are staying home and they're ordering stuff off Amazon. So companies like that, companies like Facebook, those are doing quite well during this pandemic. But if you look at a broader survey of that S&P 500 companies, you're going to see profits down in the vast majority of those companies, and down sharply in many of those companies. And even sectors like utilities, which tend to be good, regardless of good times and bad times, their profits are even down because we've canceled all the sporting events, we've canceled all the concerts, more people working from home, the load has shifted, the time of day where peak power is happening has shifted. And so the utilities have even suffered somewhat from this. So, one of the sectors that's fared well is consumer staples. We still need toilet paper and toothpaste and, food, those staples. That sector has done pretty well, but, a lot of the sectors have really struggled.
Now, I'm wondering, at $40 a barrel, is that comparable to where it was in like 2019, 2018, 2017? At that price, are we going to see certain changes as far as natural gas drilling, oil drilling, offshore drilling?
You won't
what do you
see a
think?
lot of, you've seen a little bit of a bounce back here, a little bit more drilling, but $40 is not going to incentivize a whole lot of drilling. I mean, that's a really marginal oil price to, to have drillers go out and say, hey, we're going to drill a whole bunch of new wells, unless they believe it's going to go quite a bit higher. If they see, okay, we're going to have a shortage. I mean, every one of these oil companies have got people looking at this. They've got economists, they've got, people trying to read the tea leaves, and sometimes they're wrong, but they may look and say, hey, we see an oil shortage. We need to be out there drilling. Yes, it's a risk, but it's a risk we're going to take. And they go out and they drill. But at $40,
I find it kind of interesting that if you look out, I was looking at the futures contracts, and maybe I was reading this wrong, but it looked like the most distant future for crude oil, like 10 years out, was only $54.
Yeah, and that usually tends to be the way it has been ever since the oil price crash of 2014. There's a lot of uncertainty now. When oil prices crashed, it broke the $100 a barrel ceiling. We were bouncing around $100 a barrel there for a number of years. And what happened is the shale producers in the US kept adding more and more oil to the market. At the same time, OPEC was adding oil to the market. We just got in a situation where the oil markets were so oversupplied that prices collapsed. And OPEC had their price war on the US shale producers. That they actually started a price war on Thanksgiving in 2014. And that drove prices all the way down to the 20s. And it didn't work out like OPEC thought it was going to work out. They thought they would bankrupt the US shale industry. And they did bankrupt a few players, but not nearly enough to make a difference. And so what we've seen overproduction. We've seen too much oil on the market since about 2014. And pretty much every year that's been the case. There's been more oil out there than we actually need. So inventories have been high, and there's been downward pressure on prices. We actually started this year in a fairly good spot. We started this year at, I think we're $60 on WTI. And I did not believe we'd go below 50 this year because it had tightened up quite a bit. But then, COVID just absolutely collapsed demand. I mean, we saw global oil demand fall by about 30% at one point. That's just unprecedented. We have no historical comparison for that. And that culminated in negatively priced oil, at the end of the contract back in April, I think it was.
Yeah. So I may have asked you this question before in past years, but there are people that, they're very concerned about the environment, and they're saying, what ought to be done, and they're trying to push this into the political parties, especially the Democratic Party in the US. What really needs to happen is these reserves, these deposits or whatever, they need to stay in the ground. Like, it should be off limits to extract this stuff, because once it's extracted, it's burned, and then it's in the air, and we got this carbon dioxide, and this is a huge problem for climate change and everything. So what do you think as far as their do they have any hope in the efforts they're making, this sort of environmentalist push, I guess you could say?
It ultimately comes down to people's behavior. And if people are going to keep buying gasoline and diesel and oil products, they really have no chance of keeping that stuff in the ground. That's what it all comes down to. It's, people are going to vote with their pocketbooks, and, as long, the way to keep it in the ground is to make it uneconomical to produce. And, I just saw a headline this morning said Total has put out a statement talking about the possibility of stranded assets. If you have perpetually low oil prices, and we've had that situation for a few years where oil prices have been down quite a bit, then you can start thinking about stranded assets. They're not going to be stranded because somebody's going to ban pulling them out of the ground. They'll be stranded because it's just not economical to produce them anymore. Even coal, as dirty as it is, we're still extracting coal. We're not keeping it in the ground we may be keeping marginal coal in the ground, because coal demand in the US since 2005 is down 50%. I mean, we have slashed our coal demand in the last 15 years. And I've actually covered that for Forbes. And the reason, the biggest, the number one reason our coal demand has plummeted, fracking of natural gas. That is the number one reason. The single biggest coal replacement in the last 15 years has been natural gas. Number two has been renewables. And that was really disproportionate 5 years ago. It was overwhelmingly natural gas, but renewables are making a stronger push. And at some point, renewables will be probably a bigger portion of that. But yeah, it's been natural gas is what has killed the coal industry. And I've covered that in some articles before. Sometimes renewables will take credit and say, we put coal out of business. So now the finger point, you want to point a finger, point at natural gas. That's really what has put coal out of business.
Sure. Now, looking back at prices, natural gas was at, I don't know, it was as high as $2.13, as low as $1.54 over the last 3 months. Do you have any ideas on where you think that might go in the next 6 to 12 months?
So natural gas prices are very strongly influenced by our oil production, because associated natural gas comes out of the ground with that oil. And so the reason natural gas prices ran up is because it looked like, okay, we're going to back oil production down. And that's still the case. We backed oil production down. And so that impacts natural gas prices. It helps drive up natural gas prices if we're ramping our oil production down, because our gas supplies then go down. But we've also seen natural gas demand go down, just like we've seen oil demand go down. And so it really depends. If at $40, we probably have enough oil production that, there's going to continue to be pressure on natural gas prices. We're going to have enough probably associated gas that, that keeps pressure on that market. If we start having to shut in more wells and oil production falls the rest of the year, and right now it still looks like we're producing too much. I just looked at supply demand earlier this morning, and it looks like we're still overproducing relative to where demand is. And in that case, that would be a bullish scenario for natural gas, because it means we're going to have to ramp down oil production some, and natural gas production will come down as well.
How about for gasoline? Back in end of April, gasoline wholesale was like 75 cents per gallon in the US.
Yeah.
And now recently it's up to like almost $1.30. So that's quite an increase. That's like a 70% increase. What do you see as far as gasoline prices wholesale going forward?
So there can be a big disconnect sometimes between oil prices and natural gas prices, because you've got and gasoline prices, I'm sorry, oil prices and gasoline prices, because of the refinery that sits there between oil and natural gas. And I said natural gas again, gasoline, and the storage of gasoline that is at the refinery. So, there'll be times of year, and people have asked me before, hey, oil prices are going down and my gasoline prices are going up. How can that be? And I said, well, look at inventories nationwide. If oil prices are going down, but gasoline inventories are also going down, you will see gasoline prices go up. And, that's been the case at certain times. They get out of whack with each other. If, scenario where oil goes down as much as it did earlier, refineries would like to run as much of that through as possible, as long as they don't have to sell it for, no margin. I mean, that's the issue. A refinery would like to buy oil at a real cheap price and then sell gasoline at a higher price. Sure. And they are just, they're trying to make money off the margin between those two. And, right now at $40 oil, you would expect gasoline prices to be up around $2. I mean, historically, it'd probably be $2 or more than $2. What that says is that demand is still soft for gasoline. And, that's what I was seeing earlier. I was seeing, demand is still significantly lower than it was a year ago. So even though, we've got oil price that would historically support $2 gasoline, we're not there.
So there's a question about the future of fracking. A couple of
Yeah.
the people who are on the call live right now on YouTube, they're wondering about the future of fracking, future of renewable energy, especially fracking in the USA. What is the likely future for it? And of course, fracking has there are major environmental concerns with fracking, especially with contaminating groundwater, and not to mention, of course, the climate change concerns. But do you have any ideas about what direction the industry is going right now, or what you think is likely or unlikely?
If oil prices support it, they'll, and gas and natural gas prices, they will continue to frack. I mean, there could be some point where if Biden wins the election and there's a lot of political pressure on him, they could ban fracking on federal lands. But I think they have zero chance of passing any sort of, ban on fracking overall. And I tell people, fracking has been around since the 40s. It didn't just become a thing. It came into prominence over the last decade and a half because we started combining fracking with horizontal drilling. That had not been done before. And so that and the push, I think, of natural gas fracking up into areas like Pennsylvania, up into the Northeast, where it's more populated, I think that's where, the big fracking backlash happened. But, there's been millions of fracked wells out there. And if fracking was regularly contaminating wells, we wouldn't have any clean water anywhere. When you think about it, and this is what I tell people, the oil formation is beneath miles of rock, often between an aquifer and the oil formation. And if that could migrate into the water, it would have already done so. I mean, the fracking, the cracks themselves are maybe a few 100 yards long, and they're just not long enough to allow the oil to migrate up into the groundwater as a result of fracking. Now, there can be problems because you are punching a hole in the ground. You're punching that well, in some cases, right through an aquifer, all the way down to the oil and gas, and to where you're going to extract it, to the producing area. If the well is not properly cemented, you could have leaks into that, into that aquifer.
That brings up a visual of like the Deepwater Horizon, how they didn't properly case that.
Well, there's a real case in Pennsylvania, in Dimmock, Pennsylvania, where Cabot Oil and Gas didn't have a properly cemented well, and they actually did contaminate some groundwater there. And that's the most famous case, and you'll hear that case cited again and again. And what I tell people who are opposed to fracking, I said, that's not unique to fracking. I mean, that's a bad cement job. That is not, because of fracking is not why that happened. Bad
because
cement,
of drilling, poor drilling.
Poor drilling. Now, it's possible that if you have an oil and gas reservoir in close proximity to an aquifer, sure, if you went and fracked that, you could frack it and end up right in the aquifer. But oil and gas producers know this. They should never frack a formation. I mean, they don't want to lose oil and gas into an aquifer. I mean, first of all, it gives them all kinds of problems, but then they're losing the oil and gas that they'd like to be producing. So, there can always be some bad operators out there. I tell people that we have environmental regulations to keep the worst operators in line, because a lot of the big operators will do, the right thing anyway. Chevron does not want a black eye from, if there were no regulations, I don't think Chevron would be out there, dumping oil on the ground and things. They're worried enough about their public image that they do it the right way. But you have small operators that would not. You've got small operators that would cut corners, and you'd have a nightmare. And that's why we have such, strict sometimes environmental regulations, is to keep those guys, the maybe 5 or 10% bad actors out of in line.
Are we seeing, due to the economic impacts this spring of COVID and whatnot, are we seeing consolidation in the industry much? Are we seeing companies go belly up and other companies buying them up, or what are we seeing?
Yeah, we are seeing a little of that. We saw Chevron buy a company last week, but you're not seeing a lot of it yet. But we will see more of it. You are seeing some go belly up. I think the longer oil prices stay in this area, and especially if we get back down to, $30, $20, $30, you're going to see a lot more go belly up. I said at the beginning of the year that, no matter what happens, companies like ConocoPhillips and EOG Resources, they'll still be standing because they are not heavily indebted and they can withstand, an extended period of low oil prices. But you'll see a lot of smaller players that have debt. You'll see them go out of business, and you'll see, them in some cases get bought up by some of the big players.
Are any of these publicly traded? I mean, is this a danger to those who are invested in these?
In some cases it is. I mean, Chevron bought Noble Energy. So Noble Energy is a good sized company, and they got, let's see, I think they got about maybe a 15% premium for that. So, I mean, if you're a long-term shareholder of Noble, you're way down. So 15%, you're not that happy about that. It's better than, what the price was, the day before the acquisition, but it's not where it was, 6 months ago. So, Chevron is picking up assets cheap. A lot of them, I'm sure they're looking at assets on the cheap. And you'll see, you will see more of that.
Are crude oil prices, is there any correlation, like seasonal? Like, would you suspect that prices typically go up or down in the winter, for example?
I've looked at that before. I think you'd find not a lot of seasonal correlation. I mean, I could make an argument that you would probably see production decline a little bit in the winter because, conditions make it more difficult. A lot of things get more difficult in the winter. But but then demand goes down as well. So, I'm not sure that if you didn't know what season it was and somebody dumped a bunch of oil prices on you, you could find any sort of seasonal correlation. You could say, well, this seems to be a regular pattern occurring, every so-and-so. And I don't think you'd find that.
Now, as we get to our last question or two, what have you seen as far as interesting, because you study the markets quite a bit, what have you seen interesting in the past month or so, say July?
I think the strength in oil prices is still surprising to me. I mean, I've watched COVID cases and I've seen, we're climbing and climbing and climbing, and I wonder what's going to happen here. I don't think we're going to head toward another shutdown, but at the same time, a lot of people are continuing to modify their behaviors, and you can see that in gasoline demand and where it was a year ago. And when you look at where we are with supply and where we are with production, you could argue, there's still a lot of downside risk here for oil prices going ahead in the months ahead, especially if Congress doesn't, I think they're going to end up pushing some more money out there to try to prop the market up. But if they didn't do that, I think, we've still got a risk of, what happened in March. We've still got more risks like that in the months ahead. But yeah, the biggest thing I think that has surprised me is just, I'm surprised that oil prices have regained as much as they have, given where we're still at in the supply and demand situation.
Would you say that's primarily due to U.S. consumption or more global consumption? Because the price is, it's not just the U.S. that determines the price.
Right. And the U.S. does export a lot of finished products, and that has definitely helped. It's helped that a lot of the rest of the world has seemed to have gotten, at least past this first phase of COVID. The whole European Union, they've got fewer cases every day by far than we do. They've gotten it completely under control. China seems to be under control, and for the U.S., that's important. We do export a little oil to China, but they suck up a lot of oil around the world, and that helps with the oil markets. So, if the whole world was grappling with what the U.S. is grappling with, we'd be in a depression right now. You probably couldn't give oil away, but the rest of the world is kind of keeping, they're still sucking down oil, and that helps prices in the U.S.
So have the exports, U.S. exports, held steady then or increased maybe?
I haven't looked. I would guess they're probably, well, as a proportion of what we're using, they're probably higher because we're using less. I would guess exports are probably about where they were a year ago. I should have pulled that number up and had a look, but I would guess that we're at least steady with the exports relative to where we were a year ago. Just thinking about where the rest of the world is in terms of COVID.
And just out of curiosity, is that exporting mostly to North America, like Mexico and Canada, or where's the U.S. export to?
So with natural gas, it goes, Mexico's the biggest destination for natural gas. With oil, it's really going all over the place. We've sent oil to, 2 or 3 dozen countries in the last couple of years. So, it's really going just all over the place.
I was going to ask, whatever happened with all those tankers that were sitting offshore full of oil? Did that resolve itself after a while?
You probably still have some of them sitting there, but with oil prices back to $41 or wherever they are, that's probably resolving itself right now.
All right. Well, Robert, thank you so much for all your time today. Really appreciate it. Again, if people want to find out more about you or what you're writing about, where can they go, Robert?
So if you Google Robert Rapier Forbes, you'll find my Forbes column. I write a Forbes column once a week. Do the same in Investing Daily, and I write one free column every week for Investing Daily. It's every Tuesday. And I don't know if you saw my Facebook status the other day. A woman contacted me and said she had been scammed out of $80,000. Somebody they were using my face and pretending to be someone else. And
oh, no.
That has happened with me multiple times because my Facebook profile is public and my pictures are public. 3 years ago, my wife got a text as we were sitting on the couch from a woman who said, "I'm having an affair with your husband." And I was like, "What? I don't know this person." And it turns out somebody was impersonating me and was scamming money from this woman. And when my wife, the woman showed my wife the texts, my wife said, "Yes, this is broken English. You should know this is not, my husband doesn't write like this." But anyway, that's the topic of next week's. I'm writing about how to avoid the sweetheart scam where, somebody will impersonate, they will catfish a woman and try to get money out of them. And it's very successful. A lot of these scams are based in Nigeria. A lot of them are in India. And, $80,000 is 10 years of salary from somebody in Nigeria. So the payoff for them is very, very huge. And I'm trying to warn people, look, these are the warning signs to look out for. So that's a personal finance column that I do every week for Investing Daily. And then I write a subscription column called Utility Forecaster that's focused on income investments. And so that in particular is directed toward especially people, approaching retirement, people who are looking for income from their investments. And that's a big focus of it. We don't just invest in utilities, but utilities are a core part of our utility forecaster coverage.
Speaking of scams, just for anybody who's on YouTube, if you type in scam or scammers or something like that into YouTube, there are several people who try to find these scammers and go after them and harass them. And there's even one who managed to close down one of these scamming places in India. But when one goes down, if there's demand, it's gonna pop up, back up again.
Right. The best thing is to inoculate people, to let them know, here are the warning signs. Here's what to expect. If these people will not video chat with you in some way, if you cannot see their face, don't send them any money. The way this woman finally found out, and I always tell people, do a reverse image search of, she contacted me and she said, "I have many pictures of you on my phone because the guy has been pretending to be you." And she said she finally did a reverse image search and landed on my Facebook page and found out, this is not some guy from Texas who's working in Istanbul, which is what he was claiming. And, I just said, you've been scammed, and it's not the first time. I've had dozens of Facebook profiles taken down that were using my images. I've had dozens of Instagram accounts taken down, people that were using my image and either pretending to be me or pretending to be someone else and using my photos off of Facebook.
Well, apparently people think you have a nice looking face, and you must be popular somewhere, Robert.
Yeah, I think people told me I have an honest face.
Very good.
So, and you know, the public profile is what they use to build credibility. You know, this woman 3 years ago, hey, this guy writes for Forbes and he's talking to me, and that helped bolster credibility. And you know, it doesn't help that my Facebook profile is public. My wife says, you know, people can go in there and just mine your photos, and I say, yeah, I realize that. I mean, that's one of the problems of having a public profile.
Yeah. All right. Well, thank you so much, Robert. And for anybody viewing, if you could do a thumbs up, that'd be awesome. If you haven't subscribed yet, please subscribe and stay tuned. Also, look for past videos. Robert and I have talked 4 or 5 times this year, some interesting chats. And thank you so much, Robert. Hope you have a great day.
You bet. Thank you.
Bye-bye.
Bye.